The Securities Commission has reprimanded and fined former 1MDB auditor Deloitte 2.2 million ringgit for 4 breaches related to the 2.4 billion ringgit sukuk issued by Bandar Malaysia in 2014. Deloitte was the statutory auditor for Bandar Malaysia and its holding company 1MDB Real Estate, now known as TRX City, for the financial years ended March 2015 and 2016. The SC says Deloitte had found irregularities which may have a material effect on the ability of Bandar Malaysia to fulfill its obligations in repaying sukuk holders under the bond program. Among others, Deloitte had been unable to obtain sufficient proof that advances to 1MDB from the proceeds of the sukuk could be recovered. However, it failed to immediately report its findings to the SC. The regulator says it found the breaches committed by Deloitte serious in nature, as it had failed to discharge its statutory obligations. The South China Morning Post recently reported that the SC said it was looking into 1MDB's auditors to see if they were aiding and abetting in the scandal or merely negligent. Deloitte resigned as 1MDB's auditor in 2016. Following the US DOJ's lawsuits over the fund, it said that the 1MDB statements it had audited should no longer be relied upon. Putrajaya expects to be able to recover part of the money stolen from 1MDB sometime this year. According to Finance Minister Lim Guan Eng, it is not going to be a big sum, not in the billions at least, but it is a start of what he hopes will be more follow-up payments. However, he declined to reveal any further details. He also urged opposition political parties that have received funds siphoned from 1MDB to return them to the government before legal actions are taken against them. As for the ECRL, Lim now says that the project hasn't been scrapped and that Putrajaya and China are indeed negotiating the deal away from public glare. He also says the cabinet has decided that only the Prime Minister may issue further statements on the project. Petronas and Oil and Gas Service Company Ozma have separately filed reports with the relevant authorities over certain false and malicious allegations made in a blog post. Both firms strongly refute the claims, calling them untrue, although neither company specified the said allegations or the online site which published the claims. Yesterday, a Sabahkini2.com report asked if it was true that certain companies receive preferential treatment from Petronas as long as there are scandalous relationships and bribe payments involved. It also alleged that Ozma had received this preferential treatment from the national oil company. LowTech chemical titan Holdings says fourth quarter FY18 net profit plummeted by 97% to 10.1 million ringgit. This was due mainly to margin squeeze resulting from high feedstock costs coupled with falling product prices. Revenue for the quarter rose 10% to 2.3 billion ringgit on the back of higher sales volume. LCT proposed a final single-tier dividend of 17 cents per share. For the full year, the company's net profit fell 26% to 786.2 million ringgit. However, improved sales volume propped up revenue, which improved by over 18% to 9.2 billion ringgit. On its prospects, LCT says the economic environment remains challenging, with the recent downgrade in IMF's outlook for the global economy, no thanks to ongoing trade tensions. The petrochemical industry experienced many uncertainties last year, and LCT expects emerging markets to see similar headwinds in 2019. Bursa Malaysia saw its fourth quarter FY18 net profit shrink 6.2% to 51.9 million ringgit, mainly due to lower trading revenue. In the filing today, the bourse operator said revenue fell 8.7% to 128.9 million ringgit from 141.2 million ringgit a year earlier. It announced a second interim dividend of 11.6 cents per share. For the full year, Bursa's net profit inched up by 0.4% to 224 million ringgit despite the challenging period. However, revenue dipped 1.2% to 550 million ringgit. CEO Dato Sri Tajuddin Atan says, despite market volatility and the tough global economic environment, its financial performance remained resilient. He believes that the strategic initiatives implemented over the years have laid a solid foundation that will place Bursa in a better position to fulfill the needs of its stakeholders and ensure its sustainability. Moving forward, he says the exchange will continue to invest in people development and building resilient systems that are crucial towards supporting the growth agenda for the capital market.